Good morning and namaskar. Every 2 months, I have been presenting the monetary policy statement on behalf of the Monetary Policy Committee and the Reserve Bank of India before you. In fact, a detailed, elaborate statement presenting before all of you is a practice which we started during the period of the COVID when there were lockdowns and restrictions. We considered that this was the most appropriate way of communicating with the people and with every stakeholder in the economy. Monetary policy is important because it affects the life of people. It affects each and every segment of the economy, howsoever small or big. It affects the vegetable vendors. It affects the big corporates. It affects the middle class. I think it also affects the farmers, the industry, the business. So it has wide-ranging impact on the economy, and that is why I'm sure that is the reason why most of you are listening to the governor's statement. Our effort is to follow the flexible inflation targeting framework as provided in the Reserve Bank of India Act. The Act provides that the Reserve Bank, that is the Monetary Policy Committee, is expected to maintain price stability. In fact, it is a mandate. The mandate given to the Reserve Bank of India is to maintain price stability while supporting or keeping in mind the objective of growth. Price stability is important for the people because it affects their purchasing power. It is important for stability of businesses. It is important for exporters and importers. It is important for every segment of the economy. So price stability is important. At the same time, growth is also very important. As an economy, India has been growing in the last 3 years at more than 8%. Growth, that is the GDP growth, the growth of the gross domestic product, is also very important. And as provided in the law, it is always our effort at the Reserve Bank of India. It is also the effort of the Monetary Policy Committee to follow the provision of the law as embedded, as provided for in the Reserve Bank of India in letter and spirit. So with these opening remarks, I present before you the monetary policy statement of today. And this is how it goes. As we stand at the threshold of 2025, let me reflect upon the eventful journey of 2024. In line with the trend in the last few years, central banks were once again put to the ultimate test to stabilize their economies against continuous, colossal, and complex shocks. Central banks are constantly adapting to the new global economic and financial landscape created by geopolitical conflicts, geoeconomic fragmentation, financial market volatility, and continuing uncertainties, all of which are testing the resilience of the global economy. The last mile of disinflation is turning out to be prolonged and arduous, both for the advanced economies as well as the emerging market economies, that is the EMEs. Maintaining macroeconomic and financial stability and building buffers continue to be the lodestar, especially for the emerging market economies. In India, notwithstanding the recent aberration in growth and inflation trajectories, the economy continues its journey on a sustained and balanced path towards progress. Amidst the reshaping of the global economy, India is well positioned to benefit from the emerging trends as it forges ahead on a transformative journey. Let me now turn to the decisions and deliberations of the Monetary Policy Committee, which met on 4th, 5th, and today 6th December. After detailed assessment of the evolving macroeconomic and financial developments and the outlook, because monetary policy is forward-looking, so we have to always look at the outlook, the Monetary Policy Committee decided by a majority of 4:2 to keep the policy repo rate unchanged at 6.5%.